Welcome to Fireside with the High Chief. Good morning, ladies and gentlemen. We have our able brother, Mr. Charles Ajegbemi. He's a professional engineer, a charter investment manager, mortgage administrators, business mentors, member board of directors. We're grateful to have you here. And today we're going to be discussing about financial and investment, how to invest in our community today. So, Mr. Ajegbemi, you are welcome to Fireside with the High Chief.
Thank you, High Chief.
You're welcome.
So I'm happy to be with you to discuss this matter.
Thank you so much. First of all, let's kick the boss roll, Mr. Ajegbemi. My first question for you is why is financial management important and why this matters for our community?
Thank you, High Chief. Um, I think I should start by I don't want to assume that we all know what financial management is, and everybody know what management and the way it sounds. Financial management means managing finance, and that's what it really is. But in the real definition, it has to do with you know planning, organizing, directing, and controlling either individual, a group, or organization's resource to achieve an effective to achieve its goal or his or her goal in an effective and efficient manner. Because everybody manage just how good you manage that matters the most. It involves, decision making, you know, um, investment. It involves allocating asset or fund or money. It involves managing risk, and in organization also involve compliance issues. So effectively, I'll bring it together. Financial management really involve the planning, the budgeting, and the control of assets to achieve a particular goal. That's what financial management all involved. Now to go to your question, why is it important?
Yes.
It is important because understanding financial management will boils down to helping you to allocate what you already have. You know, allocate it. In a more efficient manner. Financial management also will help you in making decisions on specific matters as okay, what should I do, where should I invest, where should I what risk I involve and matters like that. It will help you to manage risk. Also, financial management will push you to understand what risk involved in what you want to um, what you are doing or what you want to achieve. Then it also help you to manage performance and if there are things you can do as an individual or if there are things an organization can do. Financial management help you to discover all this in helping you to plan strategically what you already have or what you plan to do. So that is why it is important um, to know what financial management really is.
Okay, thank you so much for that. The following question will be what kind of investments are there and which do you see would be fit for first investor within our community in particular and Nigeria in general?
So I want to explain. I will explain. I will expand on the investment side. But I also zero down in our community when it comes to community why they should also understand financial management. Financial management also will help because all these factors I just listed. It will help you to build your own economic assets. So you'll be able to, because now you know how to allocate assets, how to plan your sustainability, and then you'll be also to also be able to manage your debt, because we all have debts. So debt is one of the major killer, but financial management helps you to understand which debt is good, which debt is not good, which debt you should get rid of, and how to get rid of it. So financial management is really important in building your economic power. Economy at the end of the day is not how much you have, it's how much you really need to make you comfortable. For now, especially when we have kids, or those are just starting, and for when you also retire, or you decide that, okay, I don't want to work anymore, I just want to live my life and do other things that I like. So in those days, especially in our community, when we were growing up in the village, for example, or what families normally do is, okay, you have many children, the children come and help the father, you know, then you take care of the father at their old age, which is part of our culture. But we cannot assume the same things that were now that we are here, because the children we have, they don't really behave like they behave like we were back home, and we cannot overly rely on them that at our old age they will take care of. They'll come and say, okay, come and be taking care of daddy and mommy. If we are thinking like that, I think we are, because it has not happened yet, because we are still very young here. If we are assuming that these children will come and take care of us, my children are very there, maybe they will, but I don't want to need it. And financial management will help you plan for that side, because we don't want to be disappointed that, oh, because one, you can have a good son, you don't know who he's going to marry tomorrow. You can have a very nice daughter, you don't know who he's going to marry tomorrow. That can enhance things or can make things go south. So this is why it is really important for our people, our community, to plan to take, so that they will be all right when they need this money.
Okay. Thank you so much.
Now, on the question of what investment, what was that question again? What
Yeah, the
investment?
question will be which investment do you think a first investor will be interested in investing in our community or within the investments company? Yes.
Okay, so let me. I don't want to assume that there's something we always assume, that we think everybody know what investment is. So I'll try to address, what investment is and why we should invest. Then I will address, okay, what investment do you suggest that people should be investing? And also, I think we should talk about what are the type of investment before we can say, okay, what you should invest in. And so I'll quickly go through what really is investment. Mhm. So investment is, see, you like in we have our different jobs. So in the morning we get up, we go to work. When we get to work, we do what our responsibilities are, and every 2 weeks or monthly, they pay us our monthly payment. Now that is me, that's you doing that job. Now investment has to do with allocating what you already have, or what you will have, or what you've already know, depending on how astute you are in that area, to extend yourself with the hope of making money. So investment is allocating money or other resource with the expectation that they will generate income or generate profit in the future. That's what investment is. Investment is, you are going to work with the hope that you will be paid. Then you are planting this seed to ensure that maybe this seed will grow up tomorrow and produce fruit. So it's allocating a resource with the hope that it will become profitable.
Yeah, if I may interject,
Yes.
what kind of investments are there in the
Okay,
public
so
domain?
we have various kinds of investments. So we have the most popular one you hear is stocks. Stocks are investments. Under stock, you have different kind of stock. Also, you also have classification, like large cap, small cap stock. But stock, what is stock? stock is the share of a company. So when you invest in stock, you are partnering with that company. You are investing in that company. When you say, okay, I'm investing in Apple stock, what you are doing is you are giving Apple money to do business that when they make profit, they'll pay you. So you are investing in Apple with the hope that Apple will do well and pay you. So there are things you can you will consider. Maybe we'll talk about that one.
Okay.
So you have stock investment. So stock is actually owning company. So when you buy the share of Bank of Montreal and TD Bank, you are also part owner of that company. So when they declare their result, their annual report, or when they give out their dividends, they will also pay you because you are an investor. You are the owner of that company. You are part owner of that company. So stock is one of them. But where people, I will normally advise people to start is through savings. You can have your saving account, which doesn't give you much. Maybe you can get, if you saving account, you can get maybe 0.2, 0.3%. Yes, it's meant for your money to be there. Then you also have, guaranteed, we call it GIC, guaranteed investment certificates. So these are fixed income certificates that, okay, if you go to the bank, let's say you go to a Bank of Montreal, say, look, I want a GIC of, say, 5,000. So they'll give you the certificate and say, okay, this 5,000 we produce for you 5%. Right now it's quite high because of the inflation, but it's going to go down as well. So when inflation goes down, the return on GIC will also go down. That means that this 5,000 we produce for you at the end of the year, it will produce for you 5% return on the 5,000, which means you will make $250. So you now have $5,250 at the end of the year. So you invested, that's guaranteed income certificate. So there's no variation like in stock. Stock, because you are the owner, you are part owner, that's part of the investment is equity. So if the value goes up, your value goes. If it goes down, your value goes down. But in a certificate of deposit, it is fixed. That one they will pay you irrespective of what happens. Maybe if the company go down. Now there's something that is very common in our community. People say that I invest in RRSP, I invest in TFSA. These are really not investments. RRSP is not an investment. TFA is not an investment. This have 401k and Roth IRA. These are the same thing as RRSP and TFSA. Just that we are late to the in Canada, we're always late to the game. US had a long time ago. They have 401k, they have Roth IRA. Now we have RRSP. RRSP has been dead. Then we now have TFSA. TFSA is a mirror of the Roth IRA.
Yes.
Now the difference is these portfolio, these are benefits of the government. So look, to help you to say, okay, if you invest in RRSP, you are using money that you have not paid tax on to invest. So that's why you see when you invest in RRSP, you reduce your tax. It's not because it's an investment. The investment is what it is placed on. So which is you are putting in mutual fund. Mutual fund, by the way, is a conglomerate. It's a combination of many stocks or bonds or ETF. I'll talk about that one. So it's a box. So when you buy, instead of you to go buy one stock, Apple stock, IBM stock, TD stock, so they bring all of them together in one place. So when you put, say, 5,000, you are buying all of them based on the percentage and allocation that the investment fund manager has created. So when you now put the RRSP there, it is that pays you. Because when people want to invest in RRSPs, they say, okay, I invest in RRSP. They don't care where the money goes. And this is one of the biggest strategies that's happening in North America. A lot of people that are working don't really know what their money is doing. So they just say, okay, I'm doing my employee investments, annual asset allocation. Because I don't blame them because it's not their area. So they just, I just tick this one, tick this number. I after taking you are putting money every 2 weeks, and your employer is matching it, but at the end of the year, your stock is not doing well because it's not their area. That's why seeking professional advice in all those things, and there's nobody providing that service. So when it's time for you to choose your employee benefit and you want to allocate which company you should invest in, don't just seek professional advice to look at, okay, what is performing and what is not performing. So certificate of deposit is good. Target using retirement fund and your employee benefits. See those benefits you have in your workplace, maximize it, because if your employer tells you that, okay, if you put $100, I will match it $100. That's 100% return right there. Make sure that you max that one out. Don't say, okay, my employee benefit, I'm putting my maximum available space is 10,000 in a year. Don't put 5,000. Don't put 2,000. Make sure you put 10,000, because your employer is going to give you another 10,000 right there because you're matching it. So make sure that's full. Then complete take advantage of your register for RSP and TFSA 401k and a Roth IRA. It's really important. Then another way we can start is index funds. So all these index funds, although they don't make that much either, but they are fixed. You know what they're going to make. So the reason for all this thing is for you to start from areas where you have little risk, because you are just starting. And one thing that is so important for new investors, especially young people that are just graduating from school or just started working, is start in time. Don't undermine the power of compounding. According to Albert Einstein, I don't know whether he said it, but everybody says he said it. So I would say he said it too. He said, it is the 8 wonders of the world. It is the best thing that can ever happen to you if you start in time. Because if you start, even there's a calculation that says that if you compound 0.01 cents, if you compound it at 100%, that means 100% daily. So if I give you 0.01 cent today, tomorrow I give you another 0.01 cent, becomes 0.02 cent, then the following day become 0.04 cent. Just think, how much do you think that will be at the end of the month?
That's a
in
lot.
30 days. In 30 days, that's 5 million. But that's because you are making interest on interest. Only, I just said 0.01 cent. You keep doubling it every day for 1 month, it's $5 million.
Wow.
So that's why you have to start in time. So every month they pay you, if it's, no matter, things are very expensive, if it's even $50, or start in time, make sure you are doing it continuously, because the return that $50 will make will also become an investment that keep compounding. Do you understand it?
Yes, I got it.
So you must start in time. All the young people, start in time. Start putting money, investing in a particular asset. If it's stock is good. For young people, fine, you can take a little bit more risk. Then dividend paying stocks. If you're in Canada, I want to tell you something. There is no better investment you can invest in the banks. Canadian bank. Now, Canada really have 6 banks. You have TD, Scotiabank, you have Royal Bank, you have Bank of Montreal, you have CIBC, then you have National Bank. Really, Canada don't want any other bank. They just kick this thing out. What's it called?
HSBC.
Sorry?
Is it HSBC?
HSBC.
Yeah.
Because they want their bank only. So, and these banks, they are top among their top 100 banks in the world. They are top 50 actually. They are very strong bank, and they are dividend paying stocks. So invest in dividend paying stock. Let me tell you about dividend. You can buy shares, you can buy stock. But the thing is, when you buy a stock, when anything happens to that company, let's say the company the company gets into a bad situation, the debts of that company will be paid first. They are number one. After, if government, they owe government anything, if you have to pay government first, then you pay the debts, what they are owing. Then you will now pay preferred share owners before you come to the commercial owner, which is regular stock that you buy. So, and also preferred share owner, they get dividend distribution. Stock owners don't get dividend. So invest in dividend stock, because when you invest in dividend stock, that dividend also gets reinvested if you're into the investment plan. So compounding works for you. So I would suggest, start saving first, or then get certificate of deposit, then target maximize your registered investment plan. Investment plan. You can try exchange traded for ETFs. These exchange traded for, because they have lower tax. Then pay dividend paying stocks. So this one will give you a little bit of a place to start, but start in time, especially if you are young. Start in time.
Okay. Then my next question would be, for example, as a new investor who has invested, like you said before, that RSP is not an investment. Okay. Now, if I have an RSP, what would you advise me to use my RSPs for, since it's not actually yielding me anything?
No, it's yielding you something, but what you should do, RSP is a plan. You now go and check, where is your RSP invested? You call your investment manager and say, listen, I want to know what you invest my RSP in. So we'll now have to look at where it is invested to see whether those companies are profitable companies. You'll be able to see their history to see whether they're profitable. Then if they are not, you can locate within the same RSP plan, you can locate your investment to a different company. I'll give you an example. So government says that you can use your pre-tax income for investment, give a 30% every month. Okay, you now take that, when you now, for you to prove that yes, I've used it and get my tax deduction, you will now call investment formula and invest, but you don't care where he puts it in. So you're taking that fund to give the investment manager is fulfilling the plan. But your investment is, where is it? Are you putting in Apple? Are you putting in IBM? Are you putting in the TD? So you want to know what is invested in. That's the investment. The RSP itself plan is not an investment, but it is where you put it. So what you do in that case, to answer your question, is to call your investment manager. Where did you invest my RSP? Can you give me a report? Which they send to you. You don't look at it anyways, because it's not your area. So what you do is you can send it to. I do it for two of my friends. I'm not an investment manager that take your money to go and invest in all those things. No, my field is a little bit different from that. The area of investment varies. I'm not an investment advisor. Yeah, if I want to be, I can be. So, but I'm not. So, but I can provide guidance. I do it for a few of my friends. I look at their plan. I look at where they invest. I tell, okay, tell your investment manager like this, or sometimes make me call to them. So why don't you do this? So what you do is to sit your investment manager and say, look, this company that you put my money, this particular one, maybe it's a mutual fund. This mutual fund is not doing well. Look at, it's making minus this, it's making minus 10%, minus 5%. Why don't you allocate my fund to a different portfolio? Because those guys, they really don't care too much. The reason is that the mutual fund manager will always get their management fee. So, and it doesn't matter. That's why sometimes you say that, oh, my fund is at minus 5%, we'll get minus 5%. The reason is that whether the fund lose or gain, you can look. The reason it goes beyond zero is because they have to collect their fee, whether you like it or not. It's automatic. So the investment manager that you're dealing with don't really It doesn't get paid based on the performance of your fund.
You see, I
So
must
what you should
confess. I must confess to you, Mr. Azigbemi, that I have never. I really don't know about this thing before because I have a RSP. I have no idea what kind of company they are investing my RSP for. So I
yes,
believe most people out there will have the same issues. And trust me, I know a lot of people that don't even have an idea what you are just explaining to us right now.
yeah, but not it's not just you see so sometimes I go downtown when
Yes.
I get something I just park. I always respect these guys. You see crowd moving, they are going to work in the evening, they're parking back. A lot of them don't know whatever that's happening. Because at the end of the day, these are the people that makes the engine, these are the people that make this country move,
Yes.
the middle class. But the thing is, a lot of them don't even know what is how things are working. So you must know, and I think there should be a consulting firm that provide that service, but there's no one. That's okay. Oh, it's time for me to do my, you have to do your every year, you have to do your asset allocation, you have to do your health plan, you have to choose. In that process, sometimes they'll tell you to you click where you should invest. You just click it there. You don't check the company, look at the analyze the company, say, look, what's their performance before you click. Sometimes a lot of people just click bond, and they are making nothing. So that area, you must be able to look at an advisor, and a lot of the advisors, with all due respect, a lot of them, few of them, a lot of them don't know whatever they're doing. So you must be able to say to your advisor, I want to see the stock analysis of this thing to see how they are doing. What's their performance before you put my money there? So paying somebody another $200 to do $300 to do an analysis for you to help you make your selection, it's not a bad idea because you make that money back by the end of that year. Okay.
Now,
So
okay, go ahead.
So
Finish
the
your.
other investment, let me quickly run down. There are other good investment, like we talk about savings, certificate deposit. You have stock, you have bonds. Bonds are good. Bonds are fixed income. For example, you have bonds here. Bonds in Nigeria is good. There's going to be diaspora bond. They're going to launch in. And bond in Nigeria, for example, if it's denominated in dollars, around 10%. There's no bond in Canada that's 5%, 9%. And Nigeria government pays. So it's a good idea for those that are here when the diaspora bond is launched. If it's launched in, if it's a euro bond, then it's good. You can invest in it because it's going to be around about 9%, sometimes 10%. Why is it like that? Because in every investment, you factor risk into an investment. You factor the risk in. So the risk of Nigeria has been factored into that bond so that people can buy it from outside. Because we are Nigeria, we know the risk there, but Nigeria has never defaulted on its debts. So it's a good idea to buy that diaspora bond than buying TD bond. TD bond, I'm looking for TD bond. There's no TD bond that is paying you 5%. The highest you can get, no matter the duration, is about 4%, 3 point something percent. So Nigerian bond is not a bad idea. And they also issue local bonds. So bonds are fixed income. It's not based on value going up or going down. Is fixed. If okay, I want to pay you 10%, they'll pay you 10%, and they'll pay out every semi-annual, most of the time, every 6 months, they'll pay you. Then you have mutual fund, that's another type of investment. Mutual fund is a basket of stocks and bonds. You have exchange traded funds, almost like mutual fund, but I don't think I should go into the technicalities. Then you have real estate. Real estate, commodities, all of those things, these are called alternative investments because they are managed, for example, we are in the alternative space because we manage real estate, mortgage investments. These are all considered on the alternative space because of the type of management. Not too much about the type of product; it's the type of management. So these are the general ideas of
Okay, thank you so much, Mr. Azigbemi, for that explanation. Then my last question for you. I know I'm taking your time. My last question for you is this, and it's not going to take. The answer is not going to take much time. Is that like people like me, they are out there who are not very conversant about how financial things are worked out in the financial world. For example, if I have an RSP, would I be allowed to take part of my RSP to invest in the so-called Nigeria bond that are going to be coming very soon?
No. RRSP, the government defines specifically how where you can invest in. There are only certain companies that are qualified to receive, and they have to be. They have some companies that can invest in global stock, but things the only way you can invest in Nigeria bond through RSP is if a Canadian firm, for example, take the bond and put it as part of their portfolio. So you cannot just cash your RRSP and say you want to put it. If you cash it, there's severe tax implications. So I do not suggest, I do not even advise it, that you should cash your RRSP and put in Nigeria bond. Because one, by the time they tax you and your tax brackets, it will take a long time for you to get that return from a Nigeria bond. So it's not a good thing to do to cash your RRSP. You can always cash your RRSP. I think they allow you to cash your RRSP to take part of your RRSP for if you are buying a house, if you are investing in your education, you want to take for education, that's allowed. Then I want to also say something about for young people. There is in Canada now. There's a new home saving account that government introduced. I strongly advise that young people should take advantage of it, because housing is going to continue to be, in the next 10-15 years, Canada is going to have a housing problem. And the cost of housing in Canada is not going to go down, because the demands, they are high. Although they are making regulations and they are injecting funds. Injecting funds is like an ocean. When you put the money, before the money flows down, it takes a long time. It does not happen like this. It will take many, many years for the money to trickle down. I also advise us, educate yourself about investments. As you present young people, you see, buy books, read about it. Because if you don't do it, your efforts, your work, your investment will be wasted. And if you say, oh, somebody lose money don't disappear. It just means that if you lose money, you just check the other person's pocket. The money, you lose it to somebody else. So why do you want to lose? Try to learn. Set your goals. Set your financial goals. Start small, and learn to invest in different places. Like in the Bible, it says that Solomon said, invest in 6 or 7 places. You don't know which one is going to do well. Diversify your portfolio. Focus on long term. Control your cost when you want to invest. There are people that charge so many different fees. Fees are your cost. And do it consistently and let compounding work for you. That's what I would say.
Thank you so much, Mr. Azigwemi. And I think I've learned a lot. And my audience who are listening to you have learned a lot too. But my last questions for you is that I know some of them are going to be calling me. Will it be advisable for me to let them have your maybe email address to contact you, and you can mentor them too, or maybe give them advice, even if it is paying advice or whatever? Is that possible?
No, for sure. They can contact me via email. And it's not just about paying. Like you as a high chief, you are providing community service. Me, I also provide community service. So definitely, anything I can do, any advice I can do that can make somebody's life better, I'm definitely willing to do that.
Thank you so much for your time, and we'll be calling you when necessary. Thank you so much.
Thank you, High Chief.
You're welcome.